Now, how many of you can correlate with the batsman and how many of you can correlate with the fielder? My guess is that when it comes to wealth, most of us represent the batsman, right? We take money for being granted. It's not on. So most of us take money for granted. And can we dim this lights if possible? This light? And that happens. So this presentation is all about making money with joy. Many people believe money itself creates happiness, but I'm sure there will be few people who will agree that money does not necessarily mean happiness. Why am I talking about money? In our culture, we have been always told that money is not everything in life. I am a Gujarati, and my mother has taught me, "Paiso hathno mel chhe." I think that's the most stupidest thing I have ever learned. I prefer American culture. This entire presentation will be available to you. Money is not everything in life. Money doesn't matter. Make sure that you have made enough money before you make such statements. And this has come from Mr. Warren Buffett, so you better follow it. Making money is tough. Otherwise, all of us would have become Mr. Ambani. Growing money is even tougher. And our experience suggests that it's the discipline and common sense. Now is it better? So discipline and common sense plays a bigger role in being wealthy than just pure dumb luck. So here I am going to teach you the art of making money with happiness, with joy. The first question which comes, where should I invest? Should I invest in India because I am Indian, or should I invest abroad? Now, our recommendation is that you should invest in India. Not because we are Indian, but because India makes money for us. Now, you can see this three lines crawling up. The white line, which you can barely see, is the price chart of a company called Apple. They make iPhone and iPad. And you would have seen the photographs right now where people are standing overnight in the queue to buy Apple's product. And this is like 6th or 7th product which they have launched. My daughter loves Apple, and every time they launch a new product, I have to bring a new phone. And if I ever go and tell my daughter that, "Beta, tera last wala to chal raha hai," I'm sure she will divorce me. This is the price chart of a company called HDFC. I'm sure most of you have heard the name. Now, HDFC in India, and it only operates in India, has lesser number of customers than there are people who consume Apple products, the iPads and iPhones and iPods. Outside of India, no one knows HDFC as a user of their product. They know as an investor, but no one comes to borrow housing loan from HDFC to put up a house in, let's say, Zambia or Zimbabwe or Russia or America. Apple is like the Sachin Tendulkar of equity market, or they are Amitabh Bachchan of equity market. Number 1 to 10 is Apple. The 11th person is half of Apple. Apple's market cap is more than entire Russia's market cap. Apple's cash on hand is almost more than half of India's foreign exchange reserves. So you are essentially talking about Apple as Amitabh Bachchan. It is 23 times bigger than HDFC. And yet, HDFC stock has delivered 3 times more return than Apple since last 25 years. So effectively, an Indian Ashwin or Umesh Yadav can go and outperform American Sachin Tendulkar. And that is why you should invest in India. All of you have heard about Bill Gates, the richest person in the world. He is owner of a company called Microsoft. In last 10 years, Infosys has underperformed almost all other IT companies like TCS, Wipro, HCL Technology, Tech Mahindra. Yes.
Take this. You'll this. Okay.
Now you could see that I have again picked up a small Ashwin or Umesh Yadav in our IT company. And it has outperformed Microsoft, which made Bill Gates the richest person in the world. That's why you should invest in India. Now today is not the right day to ask this question, because post Volkswagen people have changed their opinion about many other car makers. But assuming that Volkswagen hadn't happened, which kind of car would you like to buy, a Honda or a Toyota or a Maruti? I mean, most people will say, I prefer Honda. I myself is a Honda user. But look at the return which Maruti has delivered. It's up 17 times Honda in just 10 years in US dollar terms. It's up 7 times than Toyota in just last 10 years in US dollar terms. In fact, Maruti proves the proverb that Baap karta beto savayo. So Maruti's father is a company called Suzuki Motor Corp in Japan. They own 51% of Maruti. Maruti owns 0 shares of Suzuki. So when people value Suzuki, they value Maruti inside it. And yet, Maruti's market cap is 10% more than Suzuki. Now, Arnab Goswami will never make such startling revelations about India. And that is why you should invest in India. The day Arnab Goswami starts making those announcements, every Indian would have already invested into it. The next question then comes, okay, I'm convinced about investing in India, but should I invest in debt? Should I invest in equity? Now, maybe in this group, courtesy Nikhil, a lot of you would have already invested in equity. But outside of this group, there is a large percentage of population which hasn't invested in equity. The total ownership of Indian equity has been declining consistently since 1994. The total retail ownership of Indian equity. So, yes, in this group probably people have invested, but not necessarily in outside world. Now, all of you have bank accounts. All of you have safe deposit lockers, hopefully. And most of you will have those bank accounts with ICICI Bank, HDFC Bank, Axis Bank, IndusInd Bank, Kotak Bank. If you had put money in savings account about 16 years ago, when this bank started, your 1 rupee would have become 1 rupee 87 paisa without paying any taxes. FD would have become 4 rupees 55 paisa without paying any tax. And 1 rupee invested in equity shares of this banks would have grown 47 rupee in ICICI, 48 rupee in HDFC Bank, 62 rupees in IndusInd Bank, 193 rupee in Axis Bank, and 780 rupees in Kotak Bank. So 1 rupee going to 780 in my parent company. This is the power of equity. This is an interesting article again which appeared in 27th April 2015 of Economic Times. It talks about how Uday Kotak set up a company called Kotak Mahindra Finance Limited in 1985. And there were few friends who were wise enough to invest money with him. And they were wiser enough to continue holding those shares and they never sold that shares. A lakh of rupee invested in 1985 has become 1100 crore today. And today only I met one of his friends who is still continuing to own Kotak Mahindra shares. 1 lakh to 1100 crore happened in front of all of us. I don't know how many of you have participated into it. Then the next question comes, trading or investment? Now I am a Gujju bhai. All my cousins are Gujjus. And by definition, then by you will agree, apna cousins keva hoy? Satodia. They all think this is trading. You have to tell me a script to buy in the morning. In the afternoon, I will sell and bring home the money. And you can do it consistently day after day, year after year, month after month. Now, if that kind of trading was possible, then this script, again HDFC, should have provided best of the trading opportunity, because in HDFC you didn't have to doubt about the promoter, Deepak Bhai is great. You didn't have to doubt about the business, it's almost recession proof. Now if you see the quarterly high-low difference of HDFC, in last 24 years it is roughly about 45%. So every year you have an opportunity to buy HDFC shares at 100 rupee and sell it at 145 rupee on an average. There are years in which the difference is only 10%, but then there are years like 2003 where the difference is as high as 90%. So if there was a smart person, he would have bought HDFC every year at 100 and in the same year sold it at 145 and pocketed 45 rupees home. And all he had to trade was just twice a year, once to buy, once to sell. Now I have been attending HDFC AGM for many years. I'm yet to meet a person who comes and says, Deepak bhai, congratulations, tamara share ma trading karine I made 45% return. I'm yet to meet one person who congratulates Deepak bhai. But in all those AGMs which I have attended, invariably I have met people who have congratulated Deepak bhai that I have bought your shares, and with that my daughter is getting married, my house is getting built, my son is getting educated in America. And you see the price performance of HDFC, which has outperformed Apple in dollar terms. And all this wealth creation has happened in front of us. I don't want to ask this question in this group, but I doubt if there will be many people who will have more than 10,000 shares of HDFC. Previously, I used to ask this kind of questions, but then my host said that don't ask this kind of tough questions to our guest. The fact is that today HDFC has become a foreign company. 74% of HDFC is owned by foreigners. So if Deepak Parekh does good work, the blessings to him will come more from Singapore and Hong Kong and Tokyo and whichever place you can think of, rather than Jaipur and Ahmedabad and Mumbai and Nasik and Calcutta. In fact, if you see the trading cycle, most of the time my cousin's trading pattern is like this. When the market starts getting momentum, press starts talking about market reaching all-time high, they all remember that they should make money. So they will go and buy something. And moment they buy, Murphy's law apply. The next day market always opens down. And they always remember that my brother has advised me to average. So they'll buy more when the prices have come down. And then price do go up little bit, so they feel happy. Then price is correct. Now then he'll call up, Arey bhai, in Nestle what happened? This Maggie ban is what? I can't understand. Then I say that, don't worry, these are all temporary things. You just keep on averaging, be a long-term investor. Now prices go further down. Now he won't call. He'll simply book the loss. Price go further down. So he feels happy that good, I have sold the shares. Now let me short the market. So he will go and sell the shares in FNO. The price goes little bit further down. He feels happy. Then Murphy's law apply, the prices starts climbing up. Now he's worried, but he thinks, let me average. So he averages on FNO short position. Then price goes further up, he'll call back. Infosys makes software or milk? Then price goes further up, he books all his losses, and then he calls up my mother. Auntie, your son is working in a bad industry. He is working among gamblers. Be careful with him. Now, how do I go and tell my cousins that I am not working in a wrong industry? You, by becoming speculator and gambler, is converting this industry into a bad name. So for ordinary individuals, do remember that the government one day will come back with this kind of statutory warning that trading is injurious to your financial health. But till such time our government became that progressive, you can remember this. Now then the next question comes, okay, we know by trading, by and large we have understood that we don't make money. But does investment make money? So that's $1 million question. And again, I don't dare ask that question because there are so many people who open up their mouths saying that I haven't made money in stock market. Yesterday I was on a India Today TV channel where a 55-year-old Parsi lawyer, Mr. Khambata, said that I have never made money in stock market. And I'm sure there are many more Mr. Khambatas in this world. So does investment make money? Now I'm sure many of you will have Maruti car. And would you like to convert that into Mercedes-Benz? Most people will agree. So if you had, when you bought Maruti cars about 6 years ago, along with that, if you had bought Maruti shares, today you would have Mercedes-Benz at your home. You didn't need me, you just needed Maruti shares. In 6 years, a Swift equivalent shares have multiplied to Benz equivalent shares. Now when I give this kind of illustration, my cousin says, hey, Mercedes-Benz to मैं अपने पैसे से ले सकता हूँ. You tell me Rolls-Royce. So I can understand that. And since majority of my cousins stays in Ahmedabad, I said, do you have Fatfati at your home? And most of them said, yeah, I have many. 2-3 scooters, motorcycles, bikes, that's common in Ahmedabad. So if we had bought a Fatfati equivalent shares of a company called Royal Enfield, you would have got Rolls-Royce today at home after just 14 years. Now, my cousins are nice. They don't ask me to produce Rolls-Royce in 4 years or 5 years. I'm sure all of us painted a house at some point of time. In last 22 years, from the cost of painting a house, a stock like Asian Paints could have given you ability to buy a koti, not in Bombay for sure, but most other parts of India. The stock is a century. Now, obviously in Bombay also we need to buy a bungalow, and which is why this kind of stock comes into play. As a kid, my mother told me Aladdin's story. And I genuinely believed as a kid that if I get a magic lamp, all my problems will be solved. After growing, I realized that neither there is magic lamp, nor there is Jenny, nor there is Aladdin. Now I don't tell my kids any stories of Aladdin. I tell them stories about stocks. Because if they can pick up right stocks, they'll actually have a magic lamp at home. And this is one stock which in last 10 years have given return, which is equivalent to having a Aladdin ka chirag at your home. You can do research on this stock on your own and figure out which is this stock. Symphony, absolutely. These are some of the companies whose products you have been using on a regular basis, and just see the returns they have made in last 15 years. Sun Pharma up 114 times, even ITC up 19 times. So it's fair to assume that investment does make money. Now, next question comes, equity is all about risk. You invest in equity, then Janet Yellen does something, market goes down. We meet many investors and we say that why don't you invest in equity mutual fund? And then they start talking about, do you know what's happening in monsoon? How many farmers are committing suicide? Some people talk about Modi. तुमको मालूम है मोदी कब अच्छे दिन लाएगा? Then there are some people who talk about currency. Do you know where rupee is heading? It's already 66. It will go to 70 in no time. Then someone talks about, do you know when Rajan is going to cut interest rate? Then someone talks about Greece. Do you know what's happening over there? Then someone's going to talk about, do you know when Fed raises interest rate, what happens? Then someone says, have you seen China? Have you seen that WhatsApp which China is circulating, that the Chinese real estate is a bubble? Then some people talk about ISIs. And then some people talk about economic details like current account deficit, fiscal deficit, inflation. Now the point is that all the questions which are being asked today, they all have happened in the past. Monsoons have failed, monsoons have succeeded. Governments have fallen, government is formed. Prime Minister is getting assassinated, new Prime Minister is getting appointed. Rupee has collapsed from 44 rupees to 70. Interest rates has been hiked by 2% and 3% in a day. Countries like Greece have become Iceland and again Ireland. US Fed has raised interest rates as high as up to 14%. Before China, Japan collapsed. Terrorists have done 9/11, 26/11. They love November. And economic factors have all gone up and down. And despite that, stock prices have kept on appreciating because ultimately stocks are slaves of earning. None of this impact as long as stocks or companies make profitability. So equity is risk, no doubt about it, but it is risk for a trader, not for an investor. And you can't think of one risk factor which we haven't witnessed in the past. And despite that, markets have gone up so much. The next question comes, why do Mr. Khambata kind of investor come and say that I lose money in equity market? I can understand why my cousins are losing money in equity market because they are speculators, they are traders. But how can an investor lose money in equity market? I think people like Mr. Khambata are losing money because they really work hard on it. They really work hard to lose money. Because otherwise, in a market which is up 236 times in 36 years, or 42 times in 26 years, or 7.5 times in 16 years, how can you lose money? You must have worked very, very hard. I'm serious. And if you see the cycle of most investors, they all started investing when Harshad Bhai called them to invest in market in 91. Then by 93, बेच के सब निकल गए. Then 94 GDR boom came. By 97 everyone was out. Then Ketan Bhai called, भाई साहब आ जाओ पैसा खोने के लिए. All of us rushed in. Then by 2003 we were out. Then 2008 we launched all infrastructure funds. Everyone invested. October 2008 Lehman Brothers collapsed. We thought State Bank of India has collapsed and we started redeeming money. Every time people have timed perfectly to lose money by entering at wrong time and by exiting at wrong time. And if I exclude SIP subscriptions into equity mutual funds for which we have data, 97% of money has come into this yellow zone where market is expensive and it's giving red signal, please don't invest. Only 3% of money has come in this blue zone where market is green and screaming, please come and buy. So people who say that my experience is not very good in stock market, they must have worked really hard to lose money. By not doing anything, you would have ended up making money. The next question comes, we all understand these things, but we get worried when equities give negative return. हम तो मेहनत की कमाई करते हैं. आज स्टॉक ले और कल 20% गिर जाए, कैसे चल सकता है? So the point is that you give good companies, buy good companies and give them time, and they'll deliver return. So this is the stock called Infosys. In its history, it is down 74% once in 2000, 50% down in 2008, and 33% down in 2013. And despite those sharp corrections, it has delivered 46% CAGR. It has delivered return which has outperformed Warren Buffett's Bill Gates' company, which has made Bill Gates the richest person in the world. So buy good companies, give time, then you don't have to worry about this 30, 40, 50% correction. And this chart could be there for any good company. Obviously, there are bad companies as well. The next question comes, I get worried when prices fall. Most of us do get worried. Now, typically, you have to view correction like this. Let's say 100 rupee stock comes down to 10 rupee dramatically, something like Volkswagen happens. Now, that's a loss of 90%. Obviously, one feels very bad losing 90% of money. But if you can move in the same stock a 10 rupee to 20 rupee move, you get 100% return. 20 to 40 makes it another 100% return. 40 to 80 makes another 100% return. 80 to 100 makes 25% return. So you have 3 opportunities of scoring a century and 1 opportunity of scoring 25%. And if you are lucky or smart or both, you can make 900% return by moving from 10 to 100. So on the way down, you lose 90%. On the way up, you make 900%. In IPL also, betting time, you won't get this kind of odds. Only in stock market, when correction comes, you get this kind of odds, 1:10. 1 रुपया लगाओ, 10 रुपया बनाओ. And 3% of money comes at the bottom of the market. Whether now that's coming by design or whether that's coming by default, I don't know. So whenever you see correction, remember this chart, 1 पे 10 का भाव मिल रहा है, capture the opportunity. The next question nowadays which people talk about is that, look, I can understand India, but ये गोरे लोग सब माल बेच रहे हैं, उसका क्या? Which is a fair point. Now for that we have to blame our DNA. As Indians, we have been given a DNA of Begani Sadi mein Abdullah Devana. When John F. Kennedy died, and he was American president, and he was murdered by Lee Oswald, America didn't declare a holiday. Now, any of you remember this picture? Philip Hughes, he is an Australian cricketer, died in Sydney on November 2014 when he was hit by a bouncer. In the subsequent World Cup, Australian players were playing with a vengeance to win World Cup as a tribute to Philip Hughes. All our Indian commentators who had gone to Australia covering that event, they kept on talking about Philip Hughes and how Australia is working to win the match as a tribute to him. If you read Times of India in those days, it all talked about Philip Hughes, Philip Hughes. Now, how many of you remember this thing? Kolkata, April 20th, 2015. This guy is a gentleman called Ankit Keshri. He was under 19 captain of India, probably next Virat Kohli or Sachin Tendulkar. He also got hit by a ball while playing cricket. And unlike Philip Hughes, who got a medical treatment, Ankit was shifted from one hospital to another hospital before he died because he didn't get proper medical treatment. How many of your newspaper covered this? Rarely. How many of Indian commentators even talked that Indian players are playing this game to give tribute to this kid? I haven't heard. If you have heard, please correct my understanding. So Philip Hughes's death becomes a national news for India. Ankit Keshri to theek hai, ghar ki murgi dal barabar. So that's why FIIs are dominating us. This is another interesting way to look at why FIIs dominate us. If you go to London Trafalgar Square, this statue of English commander is there, and there is a plaque which says, to Major General Sir Henry Havelock KCB and his brave companions in arms during the campaign in India 1857. Englishmen paying tribute to English commander in city of London, and they are worried that how will Indians think if they visit this place. So they have used the word campaign in India. And what have we learned in our history book? 1857 was mutiny. Indians describing Indian soldiers fighting foreigners as mutineers, and Englishmen paying tribute to English commander in England using the word campaign. So we have a DNA problem. Hopefully that DNA will get sorted out with our next generation. I don't have much hope on my generation. And we think things will change. And this is the confidence why we believe this will change. Do you remember this picture? Saurav Ganguly removing the shirt. Why did he become Salman Khan? Absolutely, Flintoff. When previous time English team came here, Flintoff was moving half naked in Wankhede Stadium, and as per market gossip, he behaved non-English way to the certain better parts of India. And in retaliation, Saurav Ganguly removed the shirt. So new generation of India is immune from the DNA defects of my generation, our generation, and that's why we believe they will be able to reply back to foreigners. In monetary terms, this is it. The mutual funds last year bought about 65,000 crore of equity. In the first 8 months, they have bought about 56,000 crore of equity. There are 80 lakh Indians which do SIP today, and which gives in our pocket 30 to 35,000 crore every year. So we believe over next 5 years, mutual funds will end up getting 3,50,000 crores. We'll have to work hard for it, but hopefully all of you will give me enough money to reach this number. LIC has been consistently buying about 50,000 crore of equities every year, primarily from Government of India's divestment. And you would have read those newspaper item, IOC cut check of 9,000 crore by LIC, ONGC cut check, SBI cut check. Over next 5 years, without assuming any growth, LIC will pump in 2,50,000 crore into equity. All over the world, pension fund invests into equities. All over the world, without any exception. The Government of India never permitted pension funds to invest in equities. It is so ridiculous that in 2005, Ministry of Finance approved Provident Fund Trust to invest into equity market. But Ministry of Labour, which I believe reports into ruling party and not to the opposition party, did not approve that till 2015. So one arm of government approved investment in equity for Provident Fund Trust,